This is Ray Dunlap from Dunlap and Associates Wealth Management in Peachtree City, Georgia. And this is our latest installment of a video that's designed to help you understand some things that are going on in the economy. And in the last couple of months, we've had more and more clients ask about certificates of deposit. Interest rates have come up. They're looking for something that can give them a reasonable rate of return with no downside risk. And CDs are one of those go-to investments for people that are looking for that type of protection. And I wanted to spend a little bit of time just going over how the protection works on a certificate of deposit. So basically the way it works is this, and this may shock you a little bit because I'm going to tell you that if your bank is a member of the FDIC, your balances at that bank, including certificates of deposit, checking, and savings account, are protected up to $250,000. The reason that I said if is that, and this is something a lot of people do not realize, your bank is not required to carry FDIC insurance. And if they don't carry FDIC insurance and they go under, and we had two banks that went under back in 2022, if that were to happen, you would lose everything. So before you purchase a CD at a bank, one of the very first things you want to do is to make absolute certainty that they have FDIC insurance. Now, most banks do. If they're federally chartered, they have to have it. But if they're state or locally chartered, they don't. And they do not have to pay to have that insurance on deposits and on the CDs and on checking accounts, etc. So it is something that's important to know. Now, assuming they do, the other thing that you have to be aware of is that your protection, the $250,000 protection, extends to all of the money that you have with that bank. So for instance, if you had a bank account that had $200,000 and then you had a CD that was worth $75,000, believe it or not, you are not fully protected because the amount of money you have in that one banking institution is $275,000, which is $25,000 greater than the protection limit that the FDIC gives us. That's another important factor that you have to consider when you're starting to take a look at how much money you might have with any one particular bank. If you have a credit union, credit unions also have a similar protection to FDIC, but it's not the same. And so it's important to understand that if the credit union has protection, it has the same dollar amount of protection as FDIC, but it is not the same. It's not federally insured. Credit unions do not have federally insured protection. Banks do. That doesn't mean that you should ignore credit unions. It just means you need to be aware. And before you put money in, before you buy a CD, make sure that you understand if that credit union is protected. There are also certificates of deposits that you can buy through advisors like myself, through different brokerage firms. And it's important to understand if they're protected, okay? Now, in our particular case, the only certificates of deposit that we recommend to clients that they can purchase directly through us, we make sure they're all FDIC protected. But that doesn't necessarily mean that all of the certificates of deposits that we could offer you are. We just are selective. We want to make sure that we're giving our clients something that has that kind of protection underneath it. But it is an important distinction and a good question to ask. Do I have FDIC insurance on this particular CD that I'm buying through a brokerage firm, through a bank, through a credit union? And all of that is critical because unfortunately, where we didn't have bank failures for decades, last year we saw two. And I'm not suggesting that there are banks that are on the precipice of going under, but the reality is we didn't expect that we would see two last year, and we had two. And the people that had money at those banks, they had FDIC insurance. They were protected up to $250,000, but any money that they had over and above that, they lost. And it was just gone, and you can't recover it. And so those are important things to be aware of whenever you have deposits in a savings account, a checking account, or especially with certificates of deposit. Because I think there's a misnomer that people think that every CD is fully protected, and that's not the case. It's incumbent upon you to check and make sure that before you buy a certificate of deposit that you absolutely know that it has that safety net that's built in underneath it. Obviously, if you have questions about this, this is something that we can research for you. Always feel that you can call us and let us know. But I wanted to make sure that you understood how the limits work, how the protection works, and how important it is to make sure that your particular bank, that your particular credit union can offer you that level of protection. And that's where you've got to get involved and ask those questions. I hope this has been helpful for you. Obviously, let us know if you have any concerns or questions that we can answer for you. And thank you so much for your time.